In question 6, you're preparing another multi-step income statement, except this time Connect wants you to begin with net sales revenue. So they're not going to have you show the whole or gross amount of sales revenue on the first line and then subtract the sales returns and allowances like we did in the Excel problem. Instead, what you're going to do is begin with net sales, and then to calculate that figure, you'll add together these two amounts. So the sales for cash and the sales on credit, you'll include both, and then subtract the contra revenue account sales returns and allowances, and your answer will be net sales, and that will be the figure that goes here. And of course, for your heading, you're going to choose for the year ended December 31st, and then you'll go ahead and complete the rest of the problem. On question 8, you need to be careful to record the journal entries for Reader's Corner. There are actually two companies mentioned in this problem, New Books and Reader's Corner, and we're preparing the journal entries for Reader's Corner. So for journal entry 1, you're recording the purchase of $585,000 on account. And reading this information here, we see that Reader's Corner bought some books from New Books. And so this is inventory that's being purchased on account. In journal entry 2, we're going to record the return of unsatisfactory merchandise for which credit was given. And so it says up here that Reader's Corner in paragraph B complained to New Books that some of the merchandise differed from what they had ordered. So Reader's Corner is getting an allowance of $13,500. That means that their accounts payable, the amount that they owe, is being reduced. In addition, Reader's Corner sent back some books that they had purchased. Here's what it costs New Books, but what we want to pay attention to is the amount that Reader's Corner paid for the books that are being returned. In other words, the total of these two figures will be the amount by which the accounts payable will be decreased. And not only will accounts payable be decreased, but also inventory, because we are sending some inventory back, plus the inventory now cost us less because of this allowance. So we will credit inventory for the total of these two figures. And then finally in journal entry 3, we're going to pay off that accounts payable, and we'll have to figure out how much we owe by first taking the cost of the books, so the $585,000 with my numbers, that's how much we paid for the books originally, minus the amount of the credit back here. So remember, we decreased accounts payable by the total of these two figures. So we're going to subtract that from the $585,000, and that will be the amount that we pay in cash in journal entry 3. Plus, of course, we would have our debit to accounts payable.